clock here in the Maldives. I posted 3 trades earlier on my story, and I promised that I'd go through the analysis of those trades. This is a slightly different strategy to what I used on my last IGTV, but I just want to show everybody there is different analysis you can use on each time frame that will help you gain those great results. So I'll go through these quite quickly. So you can see that here we have previous support. Okay, we've driven into that and we've had a bullish move, but we've come below and we've rejected. So that support, again, as I said in my last IGTV, that support is now resistance. Okay, and that plays a part when I come into setting my take profit later on, but I'll go into that shortly. So you can see we've changed trend, making lower highs, lower lows. We've driven down, we've got a bearish engulfing Mariposa closure, and you can see here, however, that after this, we haven't been able to break this level. The candle body has not closed below this. We've had a wick into it and it's been rejected. But you can also see, using the volume, we've got one bearish volume indicator, and we've got 1, 2, 3, 4, 5, 6, 7 bullish indicators. So that for me would show, okay, right, money's coming into the market, we've got a buy here. So I won't enter straight away. I won't enter after this. I will wait for price to come back into my area, which I've highlighted here, and I will enter with a tight stop, which I've done. Okay, we'll then see that bullish move higher, a little bit of retracement. We've broken trend now, so we're making higher highs and higher lows. But I set my TP because I want to be conservative. Don't forget this is a 1 to 8. I want to be quite conservative, but I've hit my TP. I've placed my TP at the resistance, just because this could be an area where it could be a fake out and then go lower, because we are in a downtrend on the high time frame. So that was my first trade. I then saw it smash through this resistance, and I was saying, right, okay, structure's now going to play a part, so let's have a look. So we can see we've come up here, and I've drawn sort of an area of interest for later on, but we've come back into this support. Was previously resistance here, so we broke below this. Now it's support again. So I was saying, right, I can enter a good risk reward trade at this area. I entered here, stops just below, it never went into drawdown, and then just flew to a 1 to 6 risk reward. Now I could have held this for longer, maybe get a 1 to 8, 1 to 10, but again, you need to recognize on the left hand side there is resistance. So we could have hit this and then come back, and it would have taken me out break even. Right, but that was the second trade. So we've got a 1 to 8 and we've got 1 to 6. Now we've flown up, we've placed our head, if you say, like above the water. We've obviously had this area of resistance, we've come above, and now we've smashed back down below. But where did we come? Back into this previous bullish momentum. So again, we're still on a higher time frame in an uptrend. So I was looking and saying, right, we've flown into this, but look how big that bearish candle is. Look how small the bearish indicator is. So again, for me, this is manipulation. People are pushing the price to this level to entice sales into the market. And then as soon as they do that, the money comes in, and again, off it goes. So again, you can see here, look at this bullish momentum that's come in. This for me is a good indicator to buy using this specific strategy, which is different to the last strategy I showed you. So originally I did have my TP up here, but I thought I want to be quite conservative. So I placed it here because I could see that maybe this will be the left shoulder, the head, the right shoulder. And I just thought, look, given I've had a 1 to 8, a 1 to 6, a 1 to 4 would be quite nice, so I don't want to be greedy. Now I could have held this for a hell of a lot longer, and it would have actually made me a 1 to 20, I think, when I calculated it. But again, this is what I said, you need to be happy with the profits in the market. You can use different time frames. You've got to understand that price knows no time. So it doesn't matter if you're on a 1 minute, a 5 minute, a 45 minute, an hour, a 4 hour, 6 hour, daily, weekly. Price is going to follow the same structure and do the same thing, and you can jump on the back of that. Now, one thing I just want to show you is going back. So this is the 15-minute time frame, okay? When I did my last IGTV, I was showing you about plotting important zones. This is another trade that I entered this morning. It's just hit TP, great. I don't show all my trades on IG. I like to be quite private at times. But This is a trade that I plotted that I'd entered, another 1 to 8 using a higher time frame, but using a similar principle. So again, as I said on my last IGTV, you want to plot the areas of support and resistance and trade between those areas. And you can see here, it's hit perfectly to the T. You can't get any more perfect than that. All right. So these are things that we need to look at. You need to study. You need to know how price moves. Again, this is Euro GBP. A lot of people are asking me on the last IGTV which pair I traded. So I trade quite a few: GJ, GU, Euro GBP, GA sometimes, but that could be crazy. And I've just found with EG, it follows these strategies that I'm using nicely. I think I probably have about 3 or 4 different strategies depending on the time of the day, the way price is moving, and also where I am. Sort of, if I'm in profit, I'll go to a different strategy that might be a bit more risky. If I'm in drawdown, that I might be a bit more reserved. So just study the videos, study the price, and then just be prepared to react when the market shows you its cards, really. And that's it for today. Again, I mean, I'll cover this. I had one question saying, how do you do like on GJ with wicks? And I haven't looked at GJ for a while, but I think GJ does wick a lot actually, and it's quite hard to get those tight stops. Now I have a few different trading accounts. Some have high leverage, some have reduced leverage. Now, if I'm trading GJ, I might go to a reduced leverage account and I can have a larger pip in terms of pip stop, in terms of what I can risk on that account. And that still means that I'm risking 1% to get a higher risk reward. And I think you just need to look at your own pairs and see what strategy works best for you. If you're looking with a low leverage account, then obviously you want to be having larger stops. But I think with EG, given that it's quite structured and it doesn't move too fast, but when it does move, the pip value is double. This is why I've started looking at it. Anyway, I hope this helps. I'm now going to go off to the beach. I've got a couple of days left in the Maldives, so I'm going to make the most of them. And yeah, again, I hope it's helped, and I'll be back soon.